So tell me if this is you or if it sounds like you, because I know it's been me in certain situations. You go into the bank, you fill out an application, you're excited to hear back if you're approved or even nervous if you got approved or not, right? So this is a situation. You sit down and the banker sits there and they say, hey, John, hey, listen, I got your application here. I'm afraid I can't approve your loan right now, right? You think, hey, I just got my credit score up. I got 680, 700 credit score. What could be happening? What could be going wrong, right? Well, I mean, you've been a loyal customer with this bank for years, and you have money in your bank. You're paying your bills. Everything's been going good for you. And the banker goes, yeah, man, I understand, but your credit score is holding you back. You're still confused. You're like, but I have a 680 credit score. I have a 700 credit score. Your profile is showing that you have high utilizations and you got a late payment 6 months ago. The bank needs to see history of your reliable financial management before they can lend to you, right? You're like, oh, but it was just one late payment, right? And my utilization, I got it down. I'm like at 30% right now. I got 20% on one card. I got it down. It's good. They said that as long as I get it under 30%, I would be fine, right? So this is typically what happens. And if it's happened to you and you don't understand why, I hope this video right here that I'm about to explain to you explains to you exactly what's going on. It can be one of 5 or 6 things on your credit profile that's getting you denied. And I want that to stop happening to you. And if it does happen to you, I want you to understand why it's happening so that you can take your power back. All right. Thank you guys for joining us today here at DTI Information Network. We are here to help you build your personal credit, build business credit so that you can take advantage of the bank's products like getting their credit cards and getting some of their loans and lines of credits to help you be able to travel the world for free, buy cash flowing assets here at DTI Information Network. That is what we're all about. We want to help you guys level up. We want to help you win. So build with us. And if you like anything in this video, hit the like button, hit the subscribe button, because we go all in. You want to make sure you have a thick profile. What I mean by that is you want to make sure you have enough accounts reporting that you pay your bills on time. So when an underwriter looks at your credit profile, they don't just see one different vendor saying you pay your bill on time, like one credit card, right? So ideally, you want to have a minimum of 3 revolving accounts. A revolving account, real quick, is just an account when you pay it, you get to use that those funds again. That's revolving. So you get to pay it, you get to use it again, pay it, use it again. That's revolving, to keep it in a nutshell. Installment accounts, you want to have a minimum of 2 installment accounts. An installment account is like a loan. It's like a mortgage loan. It's like an auto payment. It's like a personal loan. So you want to have a minimum of 2 of these on your credit profile. Now that's 5. Now you're going to want to have some other things on your credit profile. It can be other types of people that report that you pay your bills on time. You want to have a minimum of 10. Some people, they will report their utilities. They will report their rent. If they're paying rent, they'll make sure that their rent is on there. If you have any other lenders, you want to make sure that that is being reported on your credit report as well. That gives you a thick profile. There's nothing worse to a lender than going in and with somebody who has a 700 something credit score and they only have one trade line reporting that they pay their bills on time. That's a very weak profile, very thin profile. And even though you have a high credit score, you still have the risk of getting denied, right? So 1, you have a very low age. And then 2, you don't have enough things reporting to give you a thick enough profile for a lender not to see you and deem you as risky, right? So authorized users, which we went over just a little bit ago, that is another way that you can actually put a positive trade line on your account. You don't want to just have one primary and then 2 or 3 authorized users to give you a thick profile. You can add the authorized users in there to beefing up your profile and thicken it up, but you don't want that to be the only thing that's giving you your high score. All right, so put authorized users on there if you can. That's people like your family members or friends. You can even buy these authorized users. Now, we only help people with authorized users who are our clients, who we vetted, but there are services out there where you can actually go and buy trade lines. I don't condone them or I do not vouch for them, but I know they are online. Trade Line Supply is one, Trade Genie is one, Trade Line Genie is one. Those are places where you can actually go and buy it, all right? So that's just a little helpful hint. Hope that helps you guys. If you guys smash that like button, smash that like button. I just gave you guys a gem, just so you know, if you don't know already. All right, now the next part is credit limits. You need to have high credit limits to be able to get higher credit limits, right? So let's say you have a credit limit. Let's say you have a credit limit of $500, right? Well, if you have a $500 credit limit, what it's going to do when you go to apply for another credit card with another lender, they're going to look at your highest credit limit that you have. And if it's $500, then chances are they're not going to want to give you much more than that $500. They may give you a $1,000 credit limit, or they may keep it at another $500 credit limit because you look kind of risky. But let's say if you have a $10,000 credit limit and you go in for lending, now they feel a little more comfortable because they see that you are able to responsibly handle a $10,000 credit limit. So they're willing to give you a $10,000 credit limit, or sometimes they'll even give you more than that to entice you to be able to use their card instead of that other card. You dig? So it's something what we call comparable credit. So you want to have your credit limits as high as possible if you want to continue to get higher credit limits, right? So there's ways that you can strategically move your credit limits up. We have videos. Please go into our playlist so that you can get information on how to boost and raise your credit limits. It's very, very important. All right, guys. The other reason why you want to have high credit limits is, let's say 1 month you have to carry a balance because an emergency happened. Like you had to get 4 new tires all of a sudden. You weren't expecting that. And it's just a bill that hit, right? Where you could not pay it all off in time, and your tires are going to cost you $480, and you only have a $500 credit limit. Well, what that's going to do is that's going to tank your credit score if you don't pay that off, or if you don't pay that up to 30%, you're going to get hit with the maximum amount of ding on your credit report. So let's say if you have a $10,000 credit limit and you get that same emergency that happens, now your credit report can handle that. Your credit score can absorb that ding that you carry that balance, because you know that if you carry under 10%, it's not going to hurt you as much, right? So getting your credit limits help give you some cushion if you ever run into any challenges with your credit in the future, right? So that's number one. The other part is that it lowers your overall utilization. I kind of went over that in just a little bit ago. But let's say you have a $10,000 credit limit and you have multiple of these kinds of credit limits. Your overall available credit to use is higher. So then if you end up having to carry balances, it drops your if you end up having to carry balances, your utilization is not as bad, right? So that's the same thing said 2 different kind of ways. I hope you get it, what I'm cooking. All right. And what I just mentioned to you guys is that it makes you fundable, right? The banks see you as fundable when you have high credit limits. And then it's also going to help you when we get you going into getting business credit, right? Business credit will give you 3, 4, sometimes even 5 times the limits if you have good personal credit limits, right? I've seen people have a $10,000 credit limit on their personal side, get approved for $35,000, $40,000, and sometimes $50,000 on the business side. That is how huge it is. So you're really going to want to work on getting those credit limits up. Don't just let them sit. All right. Don't let them sit dormant and think you're okay with just having a $3,000 credit limit. Give yourself some breathing room. Give yourself some cushion. All right. So I hope that information helps you guys. I'm going to leave it there for tonight. I really wanted to make sure you guys understood this on the personal side, how important it is to have your foundation set so that you can be fundable to get lending. All right. So that you can get credit cards, personal loans, personal lines of credit. These are important to be able to have, to be able to set yourself up properly. And having a good, solid credit profile will actually be what gets you that. All right. So thank you guys for dropping in. If you haven't already, hit that like button, hit the subscribe button. We will see you again on the next visit. Peace.